Test 1, 2, 3. Recording in progress.
Morning, everybody. Call to order for a regular meeting for the Corporate Governance Committee on Wednesday, October 9th.
I will, 1 second. Thank you, Mr. Green. This meeting is being conducted as a virtual and in-person meeting, so I will do a roll call of the trustees to confirm attendance. Mr. Green?
Present.
Ms. Ginsburg?
Here.
Ms. Martin? Mr. Rude? Mr. Jones? Okay, Ms. Mead?
Here.
Okay, Mr. Fay? Mr. Gatto?
President Jones.
Oh, thank you. Okay, so Mr. Jones will be participating under AB 2449. Can you please confirm there's nobody over the age of 18 in the room with you?
Yes.
Okay, thank you. Staff participating in the meeting include CIO John Grable, Deputy CIO Jude Perez, staff Scott Drazel and Dale Johnson. Trustees, please use your raise your hand option to be placed in the queue. At this time, we ask all meeting participants to mute your mic until you're ready to speak. And now we may proceed with the agenda.
We're going to defer number 3 until we can get somebody else in the room for approval of minutes. Do we have any public comment moving on to number 4?
We do not.
Okay, excellent. We've got reports, item 5, 5A and 5B. Mr. Drazel.
Great. Good morning, and thank you, Mr. Chair. Good morning, members of the committee, trustees. Report 5A presents for the committee's review the results and trend lines of our proxy voting for the total fund for last fiscal year. LACERA has also restructured the accounts in the OPEB and started voting proxies by retaining the voting rights for those accounts. That report is provided as report 5B. So with the chair's permission and without objection, we would like to suggest that we go over both reports together, starting with the LACERA total fund as they're related.
Any objection? Absolutely, with the recommendation. Please continue.
Great. So Cindy, if you don't mind pulling up slide 2, please. Oh, actually, I will take the. Perfect. So I'll go over some background and Dale will jump into the stats and observations. So on slide 2 here, to help level set the discussion, where LACERA holds shares at public companies, we have the right to vote on certain matters presented to shareholders at shareholder meetings, annual meetings, and special meetings. Fiduciary duty considers our proxy votes to be plan assets and have to be managed in line with our fiduciary duties, in line with our economic interests. So we vote shares to support policies that we believe will protect our investments or enhance the prospect for stable returns. LACERA has intentionally restructured our global equities accounts in recent years. That has resulted in saved fees, lower fees, expanded transparency into our account holdings, as well as, importantly, expanding our right to vote shares of the underlying holdings. So as you can see across the bottom, a few years ago, we were voting 19% of the value of the total global equity portfolio. We've now surpassed 96% and anticipate continuing to be able to expand our voting authority. That means that wherever we hold shares of one company like Apple, we are voting consistently in line with the policies approved by the board. I'm going to jump to slide 4. Here on slide 4, you can see that as global investors with diversified holdings across 7,000 companies over 60 markets, we are voting shares across thousands of companies. And the bar chart at the bottom shows the number of meetings that are coming up every month. You'll note that most meetings occur between April and June of every year. That's the busy proxy season or second quarter of the calendar year. So that ends up being a compressed time period during which, sometimes we have a few days notice to review items and apply votes in line with LACERA's policies. I'm going to go back to slide 3 and answer the inevitable question. So how do we manage that volume of shares, of that volume of votes? LACERA has intentionally put together our corporate governance and stewardship principles policy, which helps to define the fund's positions on common topics that are coming up in corporate governance, including topics that come up on proxies. The policy is intentionally divided into 5 sections that reflect 5 common topics. So for example, on the pie chart on the right side, you'll see that about 58% of items that are coming up for a vote pertain to director elections, our support or opposition of board candidates, or rules around how directors are elected, such as should they be elected every year or to a staggered term. LACERA advocates policies by which shareholders can hold directors accountable. For example, we expect all boards to have a supermajority of independent directors, and that all directors should be able to demonstrate prudent risk oversight. So we're reviewing the performance of boards and the composition of boards to apply those votes. Where we review items related to executive compensation, so you can see in the pie chart that's about 12% of our votes every year. Our policy expects to see pay for performance to encourage alignment of interest between executives managing the companies that we're invested in and us as providers of capital to those companies. And in the pie chart at the very top, that E&S stands for environmental and social issues. So you can see that that's about 1% of the total volume of items that are coming up for a vote. Although environmental and social issues sometimes get a lot of attention, you can see that they're generally a small percentage of the total mix. When those items come up for a vote, our guiding principle at the bottom of the left side chart is that we're encouraging prudent mitigation of business risks, operating risks that might pertain to environmental liabilities, talent management, and other matters. So with that, I'm going to turn it over to Dale.
Mr. Jizzle, before you move on from that, just a quick question on the the heavily weighted voting on the previous slide for the director positions. It's remained consistent since the revamping of this, and I just was curious, other than the review of the data and performance package, do you guys when they're running for the positions, does LACERA staff happen to interview these people? Is there an interview process that goes on too?
So the selection of the board nominees,
Correct,
Chair Green, is the responsibility of the nominating and governance committee that every board does establish. So we're reviewing who they're putting forward.
Gotcha.
The moment when investors may be increasingly involved, I guess there are probably 2 areas. From time to time, there are proxy contests when an investor might put forward an alternative slate of directors that they believe are better positioned for, to serve investors' interests. So sometimes in those moments, there are more direct discussions with directors on if we believe that they'll better serve our interests. Other times, we're talking with some directors when we want to better understand the rationale for their governance practice or how they're trying to identify skills needed for the board to cast a wide net for what their recruitment and refreshment practices are.
Gotcha. So mostly reliant on their selection process and the reporting that comes out, their interview and whatnot process within that fund.
Right. We're evaluating the results of their
results, but occasionally staff will go directly to them and field questions, right?
Correct. On occasion.
On occasion. Excellent. That's great. I encourage that.
Great.
Yeah. Thank you.
Thank you. I'll cover quickly on slide 5, just a reminder of our process here. This is on the right side. The committee is developing, the board is approving our policies. Then we jump into the implementation phase, through which we use an online platform that helps channel all of the shares for which we have a right to vote. We apply the board's policies. We have access to various research services. And then we come back in the fall at today's meeting to present you the high-level results. So with that, I'm going to turn it over to Dale, who will jump into slicing and dicing some of the takeaways and the trend lines on the support levels.
Thank you, Scott. Good morning, Chair, members of the committee, and trustees. On slide 6, we break down the number of proposals by whether the proposal was put forward by company management or by shareholders. Generally, shareholder proposals account for a small fraction of the total proposals we see on ballots, and in this case, it's less than 3%, as noted in the chart on the left, and that has remained fairly consistent over the years. The chart on the right illustrates LACERA's overall level of support for management proposals, which has also remained fairly consistent over the last 3 years, whereas the support for shareholder proposals has varied year over year as the mix and types of shareholder proposals put forward also changes year to year. We break down some of the components behind those numbers in the next 2 slides. Slide 7 further expands on management-sponsored proposals and focuses on 3 key areas: director elections, advisory vote on executive compensation, also known as say on pay, and auditor ratification. As noted in the top of the chart, LACERA supported 57% of directors up for elections and highlights the key reasons for vote against next to that bar chart. Inadequate number of independent directors accounts for the significant majority of the votes against directors. Another contributor to the votes against directors was focused on key leadership at boards where there's lack of a credible track record of the inclusion of directors with diverse attributes. The middle chart displays LACERA's support level for say-on-pay ballot items. Say-on-pay votes are non-binding voting items required by the 2010 Dodd-Frank law, by which investors can weigh in on whether we think overall CEO pay practices are acceptable. LACERA's principles state that executive compensation, as Scott noted earlier, and incentives should align with the interests of executives with that of investors. There should be a balance between incentivizing and rewarding executives for superior performance while encouraging risk mitigation and avoiding excessive risk that may be detrimental to the firm's long-term value. LACERA votes against say-on-pay proposals where the link is broken as a message for the board to revisit and revise their pay practices. The bottom of the slide provides brief examples of votes that LACERA casts this year on management-sponsored proposals. Slide 8 delves into shareholder-sponsored proposals. The top chart highlights that most proposals, or 80%, address governance-related topics. LACERA's support for governance proposals dropped slightly even as the number of proposals increased. Common governance topics are noted next to the bar chart and have remained fairly consistent over the years. Environmental and social proposals vary by topic year over year, and LACERA typically supports requests on how companies address business risks that may impact financial value as guided by our corporate governance and stewardship principles. LACERA's support of environmental proposals decreased as the nature of the requests this past year became more prescriptive, meaning they were requests for companies to take specific actions that may not be in the best interests of the company or its investors. In addition, we are also seeing proposals for companies to not report certain environmental risks, which LACERA would oppose as we encourage clear disclosure of material business and financial risks. LACERA's support for social proposals such as disclosure of workforce diversity and other best practices in human capital management has remained fairly stable. The bottom of the slide provides several examples of shareholder proposals that LACERA supported during the proxy season. Slide 9 provides more insight in the differences in support levels of management and shareholder proposals in the US relative to outside the US. To be clear, LACERA's principles are universal and applied globally, but there is a meaningful difference in support levels by region because of local governance practices, which can vary market by market. For example, in Japan, boards often lack a majority of independent directors. So the top left chart compares support levels for management proposals for the 2 regions and highlights differences driving the support levels, such as lower board independence in Japan. The bottom right chart highlights vote levels for shareholder proposals and key differences. Generally, support levels have remained relatively consistent across sponsor and region. The one I'd note is the slight drop in support for US shareholder proposals due to the more prescriptive nature of the request as discussed in an earlier slide. Zooming out a bit from LACERA's specific voting results, in slide 10, we share some of the bigger themes on management-sponsored proposals that we saw during the proxy season. In earlier slides, I commented on how these items were addressed in LACERA's proxy voting, but this slide summarizes some key market developments, including outcomes and trends. Generally, say-on-pay ballot items and directors continue to receive high levels of support from investors. Despite investors showing a higher level of support for pay practices than LACERA, with 91 being the average support for CEO pay, where ours was 76%, we note here that there are some high-profile negative votes. Investors' focus on board quality continues to drive disclosure and evaluation of board practices and composition to reflect a diverse set of perspectives and skills represented on the board to drive company strategy. We note several trends of increasing board diversity among broad indices, but recognize companies have more progress to make to cast a wide net for talent, inclusive of diverse directors. This slide summarizes some market trend lines and observations among shareholder proposals, particularly with an environmental and social focus. Investors overall submitted more shareholder proposals in 2024 than 2023, but support for those shareholder proposals was flat year over year. Several factors appear to be contributing to that trend at an aggregate level, so less proposals have been withdrawn, which is where companies agreed to shareholder requests. As a result, more prescriptive requests, such as ceasing certain business practices, are going to a vote and are less likely to receive shareholder support. And there continues to be strong investor interest for more transparency on workforce composition, such as disclosing EEO-1 reports, and also for civil rights and racial equity audits, which request a report on evaluating to the extent which company practices may have a disparate impact on communities, customers, or other stakeholders that may pose business impediments and liabilities. At the bottom of the slide, we highlight two topical issues from the past proxy season. First was the introduction of new proposals asking companies to report on their use of artificial intelligence and to encourage board oversight of risks related to the use of artificial intelligence. Second was ExxonMobil's actions to discourage a shareholder proponent from submitting a proposal to be voted upon by the company's shareholders. Ultimately, the issue was settled, but the ramifications are still unknown. Slide 12 provides a summary operational update on key reasons for not voting proxies. We strive to vote all shares where we have voting authority. However, consistent with our policies, we may not vote some shares for certain reasons. Here we present the quick summary of where we did not vote. The main reason is that LACERA policies provide that LACERA participates in securities lending to generate incremental income consistent with our fiduciary duty per LACERA's securities lending policy. In addition, our ability to vote shares may be impacted by administrative requirements and practices in certain local markets. For example, some countries only allow local market investors to vote shares in local market companies. In another example, LACERA policy provides that we do not vote when companies require shares to be blocked from trading for a period of time prior to the meeting, also known as share blocking, to not impede our managers from acting in our financial interests. So LACERA has intentionally supported the work of organizations such as the International Corporate Governance Network, or ICGN, who have advocated that markets drop share blocking requirements. As a result, the number of markets and companies implementing share blocking has declined significantly over recent years. As mentioned in the outset by Scott, Report 5B is a separate presentation that provides a high-level snapshot of proxy voting for the OPEB Trust, which we will now review.
I got a quick question on the voting for environmental stuff. Just one example year, it trending down a little bit, but do you guys anticipate as you know, some of these funds start adopting more of a green, do you see a potential trend for less interaction by proxy voting for some of these companies?
So we're seeing on the environmental issues, I think we're seeing that as the support levels increased in prior years for companies to identify environmentally related risks, climate change related risks, and disclose those risks, the more the support levels increased, the more companies have started to disclose voluntarily or negotiated a settlement with a shareholder proponent prior to the proposal going to a vote.
Gotcha.
So what that means is that the items that are going to a vote more recently and where it looks like support levels might be wavering, it's either because the proposals might be more prescriptive, more kind of telling a company to take a very specific action on which we rely on the board and management to possibly be in a better position to understand the specific nature. We'll encourage disclosure so investors can take that information to the mix in our investment decisions, but we do rely on boards and management to manage the day-to-day of the companies we're invested. The other reason is that we are seeing the rise of what you might term anti-environmental proposals that basically ask companies to not provide certain information. And the LACERA policies encourage disclosure of material risks. So there is noise in a sense behind the support levels. It depends on the particulars of what types of proposals are actually making it to the ballot every year. And the more companies have expanded disclosures and reporting, the less kind of some plain vanilla type proposals asking for reporting are actually going for a vote.
So the indirect result is it's not going to diminish our ability to participate in the vote, but we might be muted, so to speak, by having it not be presented for vote, right? I mean, on the negative side of it. Is it follow my train of thought on that? If as more people come on board with it, and then you have this other faction that's not, that's deliberately not, like you said, when it comes to the board to vote, if as people, it loses luster, attention, it falls under our policy, but there's no risk for our proxy voting power to be diminished from it, only in the sense that they just might not bring it to vote, right? On their board.
So I would say it's correct, and Dale might have thoughts, but it's correct that the mix of proposals coming forward doesn't necessarily impact our ability to vote. Those rights kind of remain the same. LACERA views the proxy vote as one tool among several to encourage good governance practices. So as we'll cover in the next report, we are encouraging more companies to make use of an established international reporting framework, which a lot of companies have adopted voluntarily without proxy proposal asking them to do so. So that's one tool included with the proxy reports. Gotcha. But our policy says that we consider that shareholders should have the right to present an idea, a suggestion under reasonable terms and conditions, and then let the market decide. As Dale pointed out, some of the proposals we're seeing more recently that are challenging companies' efforts to create an inclusive workplace, those proposals are getting very minimal support, 2 or 3%. So the investors are speaking that despite the proposal being presented, we think investors have a right to present a proposal. The support level is very minimal, and that can be a signal to the company that investors remain broadly supportive of inclusive workplace practices as a means for creating and sustaining value.
Gotcha. Yeah, like I said before, I mean, LACERA, tip of the spear on some of this ESG stuff and leading the way on it. It's good. So appreciate it. Yeah, thank you. Thanks for entertaining all that.
May I follow up to the question a little bit? So do we, we vote, right? We vote a lot. And then I just do we check the outcomes? I know we don't always have the control of outcome. The outcomes might not always be the same as our vote. This, regardless, is still very important to vote as a way to communicate with the world where we stand, right? So my question is, do we check the outcomes and see the outcome of the votes with this trend in there?
Yeah, we do track the outcomes of the results, and often if it's a majority supported proposal, the company will adopt it. So that's what we're hoping for. To the extent that it isn't majority supported, oftentimes it comes up for a vote the next year, and so we have an idea. But generally in the market, so like the market themes here as far as the support levels, we're seeing at an aggregate level how that's happening, but we're also watching how the subjects within that perform, because that's kind of telling us where the interest in the market is, and if that aligns with what our expectations are for companies as far as implementing requests. So I think we are tracking it both at a high level and for the companies in which we're invested. Yeah.
So to give you an example, like the climate, right? It's just heard that there's more issue about climate, in the ballot now for voting, and the trending and going that a lot of them is anti-climate. So for that kind of trending, sounds like it's a fight there with the bipolar side. Like, how's the outcomes there in the voting? Like, how does the voting speak this moment on that issue?
Sure. So thank you for the question, Trustee Mead. For shareholder proposals, typically they're non-binding or advisory. What we've found over the years is that if a substantial part of the investor segment of every company is supporting a proposal, a prudent company might say, even if it doesn't have majority support, is there a good idea there that we want to maybe try to expand our disclosures or reporting? So typically, even with 20 or 30%, a company might be taking some steps to address a palpable interest from investors to address. We have built into our policies that when and where a proposal receives majority support and the board has taken inadequate action to address that proposal, we will oppose the directors responsible for that, part of the board's activities. If it's related to board nominees, we may oppose nominees up for re-election who are serving on the Nom/Gov committee. If it's related to other risk oversight, it depends on the nature of how the board's comprised, that we can oppose directors who are not taking adequate steps to address a majority support from investors. So it's a mix, but from even minor support over the years, we've seen advances of companies having annual elections, for example, for every director. That's not a regulatory requirement. It's simply something that came out from private ordering in the marketplace of investors weighing in on shareholder proposals.
Thank you.
Just for the benefit of the committee and the board, good morning. At the table, we have the privilege of, and Scott and Dale, of two former directors on the Council of Institutional Investors. And as it relates to, the last question, while we're in the grand scheme of things, a small shareholder, on average, we own, much less than 1% of the average company in the market. We work through forums such as the Council of Institutional Investors to amplify our voice, and amongst other investors. So I think that having, Dale and Scott at this table really is a privilege for us as an organization.
Yeah, thank you, Mr. Groh. I agree. The CII with that, for example, the CEO wages and earnings, that's a collective, that came out of the CII. Same thing with the artificial intelligence as a direction. I know it's included in the presentation, an area to focus on for future concerns or anything dealing with it. So yeah, it's a really good company. Before we move on to item B, just an order of business, if we can get a motion to approve the minutes. Since we have a third here.
Oh, hold on one second. Let me just go back here.
You good?
Yeah. Okay.
Motion to approve the minutes from the corporate government meeting of May 8th, 2024.
1 second. Okay, we just need a motion.
I'll have a motion. Second.
Okay, Mr. Jones?
Hi.
Okay. Mr. Green?
Aye.
Ms. Ginsburg?
Yes.
Mr. Ruth?
Yes.
Okay, the motion passes unanimously.
Thank you.
Great. So item 5B is the quick synopsis of the OPEB voting. And to Dale.
Thank you, Scott. So similar to the slide Scott covered in the comments in the previous presentation, LACERA's OPEB trust is governed by its own investment policy statement, and votes are cast in accordance with LACERA's corporate governance and stewardship principles. The OPEB trust equity portfolio, as Scott also mentioned, was commingled, a transition from a commingled account to a separate account in late 2023 to improve transparency and ownership rights. So a result of that account change, we started being able to vote proxies in the OPEB trust in January 2024. So this slide summarizes the voting results for the last 6 months of the fiscal year. And during the peak of the proxy season from April to June, there were 4,236 meetings voted in the OPEB trust, compared to 4,664 meetings voted in the LACERA trust. So very similar results. And it should be noted that the OPEB trust does not participate in securities lending. So the number of meetings voted in North America and Europe will be generally higher compared to the LACERA trust. So on this slide, we show the breakdown of management and shareholder sponsored proposals and their support levels. Again, these are very similar to the trust, and we would anticipate that they would be substantially similar over a full fiscal year. So that concludes our presentation, and we're happy to address more questions. Thank you.
Thanks, you guys. And Mr. Grable, thanks for, when you look at those numbers, it looks like, it's not 1% of the fund invest, it seems like there's a lot of numbers seem, the money versus what we're actually voting on, the number of votes and stuff. So thanks for shedding some light on that. Does anybody have any questions?
I do have a couple questions. So I want you to share with this board, the committee is curious about the part that I know some issue, majority of them are very clear where we stand based on our value, our principle. I would assume this is a small portion, but it might be really not clear, right? So maybe how to say it, how internally, how do you handle those issues that is controversial? We are not, it's a little bit more complicated than like a decision we can make based on our principle. So how internally, how do you make that decision, how to vote?
Sure. Yeah, we thank you for the question, Trustee Mee. We have procedures as approved by the committee and the board that when and where anything might not have a clear interpretation of the principles, the team deliberates, we present what direction we intend to vote to the CIO and the chief counsel, and for to ensure that we're all on the same page, and then we execute the vote. I'll give a key example of this is in high-profile proxy contests, which Chair Green raised the topic. So take Disney for example, in last year, or Norfolk Southern, where a group of investors are presenting alternatives to the board. We do have policies that help provide guidance. We're looking for the nominees for the board who are best suited and bring a mix of skills to the board that helps oversee risk and drive future value. But given kind of the particulars of every case, they tend to be very time sensitive. There's new information coming out even the day before the vote is due. We'll do the assessment and then send our intended vote to an internal group to ensure kind of checks and balances on the vote and ensure that it's in line with the spirit of the board's policies.
Thank you. One more question just for this board and committee's understanding is that I would assume Trustee may be wondering, this is just like public equity that we have both, right? For private equity that we invest in, how do we guard our interest through governance practice?
So the governance practices in private equity would be incumbent upon the individual contractual terms, but the team does generally strive to get a seat on the Limited Partnership Advisory Council, the LPAC, and matters to vote. Our principles are positioned to be fund-wide. So the spirit of the principles are intended to apply when and where we have the right to make decisions with, with our assets.
Thank you for sharing.
I just want to make a comment. I know that there's a correlation between the number of investments and companies and our reallocation and diversification with the increased number of votes. But I just want to, the restructuring, I'm new to all this, but the question was asked once, is democracy dead, right? But I think it's a great thing that we're, involved. I mean, I know there's a, from the old data prior to implementation with the number of companies and votes we were casting and stuff to now, there's, with the additional monies and whatnot. But the fact that we're involved, even, I mean, if it's not that significant with the entire amount of our fund, it's still, 8.2 billion, right? Roughly. So I think it's great. I think, you guys are doing good work, and it helps, like I said, tip of the spear. It helps us not only maintain our integrity and our fiduciary responsibility, but also is leading the way for other investment funds to, participate. And I think in a lot of things that are super important, so thanks for that. Yeah, thank you.
Thank you. With that, we're happy to move to the final report, 5C, if the committee so desires. Excellent. So report 5C, we can give a moment for the deck to come up here. Perfect, thank you. So report 5C provides an update for the committee's review of some of our key corporate governance and stewardship initiatives. This report we've divided into 3 parts as laid out across the bottom of slide 2 here. The first part is going to summarize the status of some of our initiatives through which we're engaging portfolio companies or policymakers to proactively adopt policies in line with our corporate governance and stewardship principles. So whereas proxy voting can be a little bit more passive, this is where we are more active. The second section provides a quick snapshot of current efforts to assess financially material ESG factors and consider those factors in our portfolio construction management process. And lastly, we'll highlight how we've continued to try to publicly report on LACERA stewardship efforts for stakeholders, the board, and members to see. All of these initiatives, importantly, are guided by our mission to produce and protect returns. We are operating in line with the board-approved stewardship principles, and really with a fundamental aim of advancing good practice that can help preserve and sustain financial value. So let's start with that first section to summarize our engagement activities. Here, where we've aimed to proactively engage companies and policymakers, we laid out a framework a number of years ago to try to help focus priorities. In the top left corner, it includes weighing in on proposed public policies and regulations that might impact investor rights or reporting requirements, market transparency, for which we often collaborate with associations that LACERA is affiliated with, such as CII and ILPA. Continuing clockwise, we're engaging companies where we think we can credibly and constructively work to advance systemic adoption of some of the LACERA's corporate governance principles. That includes engagement projects currently related to board diversity, climate risk, and promoting equal voting rights for investors. And the bottom left corner, we're supporting efforts to increase the availability and quality of information related to ESG and climate matters so that investors can better price risk and inform our portfolio construction. And lastly, we're endeavoring to advance some thought leadership, such as our efforts to consider DI and the investment process, and for which we will have a summary report in December on LACERA's TIDE efforts. Throughout these efforts, as noted across the bottom, we're guided, of course, by fiduciary duty and our mission. We endeavor to focus our priorities across those thousands of holdings that we just talked about. So we try to focus where we can be credible in the marketplace and make meaningful advances. We try to be diplomatic and speak with a voice as an investor, as a provider of capital, not an outside agitator, and make responsible use of our finite resources. And we try to focus our efforts on where we can have synergistic spillover effects, so that where a company might adopt improved practice, it might help move the needle across the market that we benefit from as diversified investors. So let's jump into some of those project updates. Slide 4 covers the update on the 6th year of our collaborative effort with other California pension plans to identify companies across our portfolios that are lagging on board diversity. Here, where we identify a target group, we reach out and ask for a dialogue with the corporate board directors of those companies responsible for nominating and governance practices. And we encourage best practices for them to think through identifying the skills needed to serve on the board, and then cast a wide net inclusive of diverse backgrounds to be appointed. As you can see in the chart on the right side there, we've engaged over 340 companies in 6 years, including 50 in the last year. And to date, over 440 directors have been appointed to those companies. Notably, where companies are not responsive, LACERA does vote against directors. And this year, we took a few additional steps to publicize our intent to vote against directors at non-responsive companies. And you can see here that investor opposition at director nominees at several of those companies was rather high. So, 24 to 56% opposition, up to 84% opposition indicates that other investors had shared governance concerns at these companies as well. For the upcoming year, the group has identified 41 additional companies that will reach out to and ask for dialogues. That includes some non-US markets with low inclusion, particularly on gender, such as in Brazil and Japan, which are larger components of our portfolio. I'll move to slide 5, which covers quick updates on a global investor initiative, which is engaging 170 of the most carbon intensive companies in our portfolio to encourage them to disclose how they're navigating the energy transition to support long-term shareholder value. These companies represent about 80% of global industrial emissions and half of our carbon footprint. As we note here, the vast majority of these companies have increased disclosures around climate risks, such as their emissions, and describe their adaptation strategies through the energy transition. What the initiative is focusing on more now is for the companies to disclose how their capital allocation and their incentives for key executives are aligned with those announced plans to navigate the energy transition. Moving on to slide 6, we have supported an effort that's co-convened in part by the Council of Institutional Investors to encourage that investors have an equal voting right at public companies where invested. So 1 share should equal 1 vote. As noted in this slide, while over 90% of companies have a 1 share, 1 vote structure, there's been a rise in IPOs that have afforded the founders like 10 votes per share. So with that type of structure, what we see is empirical evidence shows that there can be a discount in the share price over the mid to the long term. And it also makes our proxy voting rights not very impactful when the founder kind of controls. So this investor group is reaching out to companies before they IPO to encourage equal voting rights, and at a minimum to consider adopting sunset provisions by which any weighted voting rights would dissipate after a number of years. And what you can see on the bottom of the slide is that in recent years, the number of companies adopting sunset provisions has increased to about half of the firms with unequal voting rights among large companies, and from 1/3 to about 2/3 among smaller cap companies. So more work to be done, but some positive trend lines. Moving on to slide 7, we continue to support the International Sustainability Standards Board It's a project of the IFRS, which manages international accounting standards. The ISSB standards define financially relevant metrics related to ESG in 77 specific industries. And as noted here, we're seeing companies using the ISSB standards either voluntarily or by requirement. So in the US, over 90% of large cap companies are voluntarily referencing the ISSB as a guide for what metrics might be useful, safety considerations in mining versus data privacy in banks. And outside of the US, stock exchanges and regulators are requiring companies to use the ISSB standards in markets that represent 75% of the market cap outside of the US. So we continue to see more reporting frameworks converge into the ISSB, which we think can be a useful tool for, just a common reference point among investors and companies alike of how to guide meaningful, comparable, reliable metrics and sustainability. Let's move on to slide 8. This covers a few quick updates on our policy advocacy. You'll see here that the SEC rule on private fund transparency that related to fee transparency, performance transparency, and some investor rights that was initially approved last year was vacated this year after legal challenges in the Fifth Circuit, and a highly anticipated SEC rule to enhance company reporting of climate risks was also challenged legally and has been stayed pending judicial review. We continue to support, obviously, meaningful disclosures. And so sometimes even when an effort may be stymied at the SEC, the voluntary adoption of the International Sustainability Standards Board that we just talked about shows that the market can still be moving without regulatory action. We are continuing to support CII in efforts to engage the SEC to encourage good investor rights. That includes encouraging them to focus on some proxy plumbing issues, such as considering using new technology to facilitate end-to-end vote confirmation, so that when we do vote, we don't always necessarily know that the votes were received and tabulated. We think the SEC can focus on improving some, facilitating use of new technology to enhance that. Let's move on to slide 9. As trustees are aware, the team assesses every mandate, every investment mandate on the extent to which ESG factors are evaluated and managed across every asset class. We have this 5-point scale shown on the left that's familiar to the board, by which higher scores represent more systematic, more compelling efforts to consider ESG that's related to financial risks. Each of these scores is regularly updated and provided to the board in the quarterly performance reports as part of the manager scorecard. The right side is a snapshot of our 4-year trend lines from fiscal year 2021 to 2024. And as you can see, there's been growing sophistication in ESG efforts. It naturally varies by asset classes. Some are just maybe more advanced, sophisticated. There are more kind of meaningful ways to consider ESG versus others. But you can see that private asset classes have been making some meaningful enhancements, and the team is using that information to assess which managers in the mix of information may be better positioned to manage our capital. We are continuing to evaluate some responses to an RFP to update some of our data analytics on this front, as well as incorporate some of the reporting frameworks, such as the Global Real Estate Sustainability Benchmark.
Chair Green, do you mind if I add a question?
Not at all.
Actually, two slides ago, Scott, I know one of the things from your annual reporting on the 4 years since I've been on the board has been the issue of the human capital SEC report. I saw that it was delayed in there. Do you have any additional context or anything that you can share as it relates to kind of where that is? Is it delayed stall? Is it delayed, but still had a lot of energy behind it? I'm just curious.
Mr. Jones, can you hear us? If you can.
Yeah, I
Oh,
just
there
talked,
you're back up. We lost your audio, so I don't know where.
oh, okay. Okay, yeah, I thought I had asked a long question. I was just asking what was the update on the delayed human capital rule, just to make it short. From that standpoint, great curiosity in that rule when I first started with the board. Just wanted to know whether it's kind of delayed indefinitely, lost momentum, kind of where's the delayed human capital rule from the SEC?
Good morning, Chair Jones. Thank you for the question. What we've seen with the human capital rule is that the SEC continues to put it on its announced regulatory agenda, which is updated every 6 months. Typically, the regulatory agenda announced from the SEC shows that there is pending action within the next 6 to 12 months. However, we have not seen action or a proposal. What we're anticipating is that at one point the SEC will put forward a proposed rule for the market to comment on. I think we surmise, Chair Jones, that what's happened is that in light of some of the legal challenges to other rules, such as the climate rule, the SEC may have some pause to putting forward an additional disclosure rule, and that may be kicking the item into future regulatory agendas. So it does seem paused at this moment, and yet it does remain on their announced agenda of items that they anticipate bringing forward in the near term.
Okay, thank you very much. I appreciate that.
Sure. Thank you. So we'll look to wrap up here with the last theme, which is just transparency. We do try to provide information about LACERA's approach to all of our stewardship efforts, including the proxy voting results. So we have updated the annual stewardship report that is included as attachment 2 to this report. It's produced in collaboration with the Communications Division. So we appreciate their work. It covers the initiatives we discussed today, as well as our approach to ESG, our approach to the energy transition, high-level summary of the proxy reports. It's available on LACERA.com. And I know that it is used as circulation sometimes when questions come up. We provide copies to interested parties. We are also updating the LACERA.com website as we submit comment letters to the SEC or other matters may arise, so that in real time we also have transparent information available to members. Slide 12 briefly summarizes the next steps of some of the efforts discussed today. And with that, we're happy to take any questions.
Chair Queen, may I make a minor comment? Not much of a question. I just want to make a minor comment that first, congratulations to Dell for your promotion, joining the team. Very pleasant to hear you speaking in this committee. So I'm happy for Scott gaining member, going the team, help you do the work. I remember in my second board meeting, seeing a letter that we're not proposing not being able to continue involved in CII. And then I made a comment back then, it's important that we continue have a footprint there. And then I'm very pleasant to see that's what we're doing right now, So thank you for all you do.
Thank you.
Good morning. Anybody else? I just had a quick, the ISSB, with the voluntary reporting and whatnot, we had that ESG breakfast at the Super Investor, and the question, as far as voluntary disclosure and whatnot, with countries, coming in with, basically consent decrees, saying like you'll never, you'll never get a majority of women in executive positions. Then countries come in, establish law, and they actually meet the bar or exceed it. As far as the impact between voluntary and having legal action, I don't know. If you could enlighten, are you seeing any? Obviously, with 90%, domestically, but with those mandates, legislative mandates in other countries and whatnot, is there impact to that as far as return?
Sure. So thank you for the question. It might be useful to highlight the distinction of the ISSB being a framework to help guide what to report. It's not a framework to prescribe specific action. So it will encourage companies to, if workplace safety is a material risk, describe what your injury rates are. Doesn't necessarily prescribe what the level should be, for example. But we do see different approaches in different markets. And the European market has taken action to require disclosures, whereas in the US market, what we saw with the climate rule with the SEC is that those efforts have been challenged. But despite the challenges for regulatory action to encourage a baseline of minimum disclosures, companies and investors alike are finding a common set of reporting guidance to be useful, and that has driven the uptake and the adoption on a voluntary basis.
90%.
Right. And critically, you think a lot of companies are operating internationally, right? So when and where they're operating in markets such as Europe, they may have subsidiaries or operations that are subject to regulated mandates. The state of California has also adopted rules that require climate-related disclosures. So one question is, to the extent that the SEC may not be taking action in certain areas, they may be surpassed by regulatory authorities in other markets that are encouraging or requiring certain baseline disclosures. So I think we are encouraging harmonized approaches. The more predictable the approaches are, the more capital markets can anticipate what's required and make use of that information. The reality is that it's a mix of approaches of regulated and voluntary action.
Gotcha. All right, I have nothing else. Thanks so much, you guys. I just like the cliff notes on, or the footnote on like slide 4. I mean, that's really great information, and I think it's worthy of its own slide. Some of that data, I don't know. It's just I don't mean to be petty. It'd be cool. I think that should be highlighted. But that's it. I have nothing further. If nobody else has anything, I appreciate you guys' effort.
Items
Reporting.
items for staff review.
Yes. Is there anything else? Any more questions for we move on? Items for staff review, nothing, and future agendas. Good to the order. Thank you. I'm happy to be here.
Thank you.
And motion for adjournment. Second. Second. 2 minutes on the table.
Recording stopped.